Test your knowledge. First question done. Second is also done. Both the questions are on depreciation. Third question. Now come to the third question. You have done similar type of questions just now with me. Which expenses are allowed, which expenses are not allowed. You are supposed to discuss that. Okay. Allowed, then what is the reason? Under which section? Not allowed, then what is the reason? Okay. Write in brief besides this only. Okay. And then we'll check the answers. Sure? Come on. Examine with reasons allowability of the following expenses incurred by Manav, a wholesale dealer of commodities. So, wholesale dealer of commodities means he is buying and selling commodities. Buying and selling commodities. He must have bought or sold commodities on a recognized commodities exchange. On that, he would have paid CTT, Commodities Transaction Tax. Do you remember? Whatever buying and selling transactions of commodities he will do, on all the buying and selling transaction, whatever income will result from there will be his PGBP income. To calculate this PGBP income, buying and selling of transaction happened on recognized commodities exchange. Has he paid any CTT? Yes. See the last point. Commodities transaction tax. How much? 20,000 on sale of bullion. Bullion means bullion is a commodity. Okay, no? So he must be trading in bullion. Bullion means commodity. He must be trading in this commodity. And he bought and sold the bullion. On that, he paid what? Commodities transaction tax. Will it be allowed as a deduction? Yes. It will be allowed as a deduction because the transaction results into what? PGBP income. And to earn that PGBP income, the CTT was paid. Will be allowed as a deduction. Clause 16, 36 subsection 1, clause 16. Yes or no? Now, there is one small thing over here. Please be careful that if this bullion he acquired as a capital asset and not commodity, not a stock for his business, yes or no? Then the CTT paid on that bullion being what? Being his capital asset will not be allowed under PGBP head. Under PGBP head only if the CTT is paid on those buying and selling transactions of commodities resulting into PGBP income. Getting my point? Okay. Now, construction of a school building in compliance of CSR activities. See, in compliance of CSR activities, whatever expenditure you are incurring now, as per explanation 2 to section 37(1), they are not treated as your business expense. If they are not allowable under specific sections, then you cannot claim those expenses as what? General deduction under 37(1). So is this expense allowable under any other section specifically? No. Then you cannot claim it under 37(1) as a general deduction. Getting my point? Explanation 2 to section 37(1). This expense is not incurred for the purpose of business or profession. It will be assumed. Hence, it will be allowed or it will be disallowed. It will be disallowed. Yes or no? Next one. Purchase of building for the purpose of specified business of setting up and operating a warehousing facility for storage of food grains amounting to 4,50,000. This entire amount he will be able to claim under section 35 AD. Why, you know? Because he is not following 115 BSc. If you don't follow 115 BSc, you get additional depreciation also. You get donations for scientific research, etc. also as a deduction. You get the deduction for section 35 AD also. So is it a deduction available under section 35 AD? Yes. So from your specified business income, you can claim this 4,50,000 capital expenditure as a deduction under section 35 AD. This will be allowed. Yes or no, sir? Next one. Now interest on loan paid to Mr. X, a resident, 50,000 on which tax has not been deducted. The sales for the previous year 23-24 was 202 lakhs. Mr. X has not paid the tax, if any, on such interest. Meaning that 194A, interest other than interest on securities. Do you remember? if interest is paid to any resident, and the amount of that interest, aggregate amount of that interest during the previous year paid to that person is more than 5,000, on that you are supposed to deduct TDS at the time of payment or credit, whichever happens earlier. Yes or no? That person should be a resident to whom you are paying. But wait, if you are a payer whose last year's business turnover was not more than 1 crore, or last year's professional gross receipt was not more than 50 lakhs, then you are not supposed to deduct TDS under 194A. But they are saying for this individual assessee, Mr. Manav, his last year's business turnover was 202 lakhs, meaning his turnover was already more than 1 CR. So if his turnover was more than 1 CR in the last year, that means in this year, he will have to deduct TDS on this interest, because the amount of interest is covered by 194A, paid to resident, and the amount is also more than 5,000. Please check. So he is liable to deduct that TDS. Even if he is an individual, still he is liable to deduct TDS on this amount. Why? Because his last year's turnover was more than 1 CR. Yes or no? And now if he is liable and he is not deducting that TDS, don't you think that this interest entirely will not be allowed? Only 70% will be allowed, 30% will be disallowed, because the payment is made to a resident. Yes or no? So out of that 50,000, 30% will be disallowed, 15,000 will be disallowed as per 40A IA, and the remaining 70%, meaning 35,000, will only be allowed as a deduction. Will you remember this? Next one, CTT we have already discussed. Okay. Now coming to the next question. Question number 4. In question number 4, no, you are supposed to examine with reasons for the following subdivisions whether the following statements are true or false. You are supposed to say that the statement given is true. Then what is the reason for that? If the statement given is false, what is the reason for that? Okay, no. So one by one, please check. For a dealer in shares and securities, you are a dealer. Dealer in shares and securities means for you the shares and securities are stock in trade. Okay. Securities transaction tax paid in a recognized stock exchange is permissible business expenditure. Meaning it is an allowable business expenditure. Is it true or false? True. For a dealer in shares and securities, buying and selling of shares and securities on a recognized stock exchange, this transaction will result in his PGBP income. So any STT paid on those buying and selling transaction as per 36 subsection 1 clause 15 will be allowed as a deduction. So the statement is true. Yes or no? Next one, where a person follows mercantile system of accounting, an expenditure of 25,000 has been allowed on accrual basis. Oh, you are following mercantile system of accounting. There was some expenditure of 25,000 which was allowed on what basis? Due basis. Okay. And in the later year, in respect of the said expenditure, assessee makes a payment of 25,000, payment of more than 10,000. The expenditure was 25,000, meaning more than 10,000. That entire expenditure was allowed. Now that entire expenditure of 25,000, which is an amount which is more than 10,000, later on it was paid by a mode which is not a specified mode. Cross check is not a specified mode. Then the amount of expenditure which was allowed earlier, out of that, whatever payment which is made right now, that entire payment is made right now. Okay. If that payment is more than 10,000, then it has to be by way of prescribed modes only. If you make the payment by way of any mode other than prescribed mode, then the entire payment will be treated as a deemed PGBP income as per 40A3A. Yes or no? So this 25,000 which was allowed earlier on due basis, they are saying that this 25,000 is paid later on by way of cross check, which is not a mode specified. Hello? Then 25,000 can be treated as PGBP under section 40A3A in the year of payment. Is the statement true? The answer is yes. The statement is absolutely true. Correct? No? Next one. Is it mandatory to provide for depreciation under section 32? Sorry, it is mandatory to provide for depreciation under section 32 while computing the income under PGBP. This is also absolutely true. You remember I told you, ask someone that whether they know this logic or not. Why the depreciation claim is mandatory? Any asset purchased for the purpose of business or profession. Hello, its entire cost will be allowed as a deduction out of that business income for which the asset is used. No. From there only it should be allowed. You don't have any other option to claim this cost under anywhere else. This is mandatory to be claimed from the business income only. Did I tell you this? So this statement is true or false? This statement is true. Because as per an explanation to section 32, explanation 5 to section 32, claiming of depreciation from business income is mandatory. Getting my point? Claiming the cost of the asset, claiming the capital expenditure incurred on the asset used for the purpose of business or profession by way of depreciation is mandatory. The statement is true. Next one. Mediclaim insurance premium paid to General Insurance Corporation by Mr. Lomesh for his employees by an account paycheck during this previous year is a deductible expenditure under section 36. Yes, under section 36 subsection 1 clause 1b, any medical insurance premium of the employees, any group insurance premium of the employees, any personal accident policy premium of the employees is allowable as a deduction under section 36 subsection 1 clause 1b. But mediclaim of the employee must be paid by way of a mode other than cash. Only then it will be allowed. So see, Lomesh is paying the mediclaim. This mediclaim is allowable under section 36. It is paid by cross check. It is paid by account pay check. Even if it was paid through cross check, no, still it was allowable. Why, sir? Why? Because the payment is made for the employee's mediclaim. Mediclaim premium paid by way of any mode other than cash will be allowed. Sure, no? So it is any mode other than cash. It is allowable under section 36. Yes, the statement is true. 35 DDA, amortization of expenditure incurred under eligible voluntary retirement scheme. Amortization at the time of retirement alone can be done. The answer is no. Amortization in 5 equal annual installments can be done. This statement is false. VRS compensation 35 DDA says that the entire VRS compensation cannot be amortized in the year in which it is incurred alone. In that year, no, it has to be amortized over a period of 5 years. Getting my point? So this statement is false. An individual engaged in trading activities. Individual engaged in trading activities, meaning he is not in manufacturing business. He is not in power business. He is doing a trading activity, trading business. Who is shifting out of default tax regime, meaning he is not following 115 BSE. Can claim additional depreciation in respect of new plant and machinery acquired and installed in the trading concern. Bullshit this is. Even if he is shifting out, see, to claim additional depreciation, you have to shift out. If you shift out of 115 BSE, you can claim additional depreciation. For a plant and machinery, new plant and machinery acquired and installed. So this assessee is shifting out. He is acquiring also new plant and machinery. Hello? But he is acquiring the new plant and machinery for manufacturing business or power business? No. For trading business he is acquiring. And any assessee who is engaged in trading business cannot claim additional depreciation. Even if he shifts out or even if he is acquiring new plant and machinery. Getting my point? So this statement is false. He cannot claim additional depreciation. Getting my point, everyone? Next one. Fifth one. Examine with reasons the allowability. Examine with reasons the allowability of the following expenses under the Income Tax Act 1961. So you are supposed to say that whether these expenses are allowable or not. If allowable, what is the reason, under which section? And if not allowable, disallowed, then why? As per which section? Getting my point? Come on. First one, provision made on the basis of actual valuation for payment of gratuity 5 lakhs. However, no payment on account of gratuity was made before the due date of filing ROI. You have made a provision. You have made a provision of rupees 5 lakhs based on the actuarial valuation. See, whenever you create an approved gratuity fund, no? Whenever you create approved gratuity fund, in that approved gratuity fund, you have to contribute some amount. Getting my point? So how much amount you will contribute? Actuarial valuation is done for that amount which you have to contribute and pay as what? Gratuity. Getting my point? So actuarial valuation was done, and according to that, payment of gratuity of rupees 5 lakh has to be made. For that, the provision is also to be made. So provision is made in the books. So this amount should also be actually paid, actually contributed. Have you actually contributed in this year? No. Then at least contribute on or before the due date of filing your ROI. That is also not done. Hence, the amount will not be allowed as a deduction. Getting my point? Everyone? No payment on account of gratuity was made before the due date of filing ROI. So this is not done. If the actual valuation has come saying that make this provision, you must have created the provision in your books. So that amount should be actually contributed, actually paid in the gratuity fund as a gratuity. Yes or no? It has to be paid on or before the due date of filing your ROI. If not in this year, then at least pay on or before the due date of filing your ROI. You are not paying that. Will not be allowed as a deduction. 43B, this amount will be disallowed. It will be allowed in the year in which it will be actually paid. Getting my point? Next one. Purchase of oil seeds. Oil seeds means agricultural produce. See, oil seeds are what? It can be mustard oil seeds. It can be groundnut. Okay. It can be any type of oil seeds. Oil seeds are grown. They are agricultural produce. So you are buying agricultural produce, oil seeds from a farmer, meaning the cultivator, grower or producer. From that farmer or cultivator, grower, producer, you are buying agricultural produce. And for that, you are making a payment of rupees 50,000. The payment is more than 10,000. And the payment is made in cash other than prescribed mode. 48.3 disallowed. No, it will be allowed because it is covered in Rule 6DD if you remember. So as per Rule 6DD, any payment made to the cultivator, grower or producer of agricultural produce for purchase of agricultural produce from them, even if the whatever may be the amount of payment, even if it is more than 10,000, even if it is not paid by a prescribed mode, it is okay. The deduction will be allowed. 48.3, 48.3A will not be attracted. Yesterday only we have done this. Hello sir. So will this payment of 50,000 be allowed? Yes, even if it is made in cash. Even if the amount is more than 10,000, still it will be allowed. No 48.3 disallowance. Tax on non-monetary perquisites provided to employee rupees 20,000. This tax on the non-monetary perquisites of the employee. How much was the tax? 20,000. Non-monetary perquisite was some amount which was given to the employee. Employee was having some non-monetary perquisites from you. And on those non-monetary perquisites of the employee, the tax which the employee was supposed to pay was 20,000. That he is not paying, that you are paying. Will it be allowed as your business expense? The answer is no. There is one section, 40 clause A, subclause 5. As per that section, any tax on the non-monetary perquisite of the employee paid by the employer, paid by the assessee will not be allowed as a business expense. Disallowed. Understanding? Hello? Payment of 50,000 by using credit card for fire insurance. See, fire insurance you will take for your stock. So premium for stock, insurance premium for stock, you pay by any mode. It is okay. And by the way, credit card is also a prescribed mode because through credit card it is established that it is your actual expense and you have actually paid to that insurance company. Yes or no? So this is a genuine expense because even the credit card is a prescribed mode of payment. Debit card, credit card is also a prescribed mode of payment. Okay. So if the prescribed mode of payment is there and the amount is more than 10,000, amount is paid by way of prescribed mode, it will be allowed as a deduction. Hello sir. Next one. Salary payment of 10 lakh to Mr. X, who is outside India, meaning the salary is paid outside India by a company without deducting TDS, assuming that Mr. X has not paid tax on such salary income, sir, the entire salary will be disallowed. 40 clause A, subclause 3. If any salary paid to resident, 30% of that will be disallowed if the tax was not deducted as per 40A IA. But if any salary is paid to non-resident, the without deduction of TDS, entire salary on which the TDS was not deducted will be disallowed under 40A3. And later on, even if the TDS is deducted, then also the amount disallowed cannot be allowed. Remember, no? Next one. Payment made in cash 30,000 to a transporter in a day for carriage of goods. Do you remember for transporters the limit was 35,000? So any payment up to 35,000 by any mode is allowed. So will it be disallowed or it will be allowed? It will be allowed. Even if made by other than prescribed modes. But the limit was not crossed. No. Limit is 35. Within 35, whatever mode you pay, the payment will be allowed for transport charges. Getting my point? Easy or difficult? Easy? Sure? Why we are doing all these things, Because now we are going to solve the main questions, Any of these things can come over there. So that time you have to identify that whether this amount is allowed or whether this amount is disallowed. Okay. Next one. Examine with reasons whether the following statements are true or false with regard to provisions of the Income Tax Act 1961. Payment made in respect of a business expenditure incurred on 16th February 2025 for rupees 25,000 through a cross check is hit by the provisions of section 40A3. Come on, a business expenditure is there which was incurred on 16th February 2025 and the amount of that expenditure was 25,000 and it was paid in that same year on 16th February by way of cross check. Cross check means a mode which is not a specified mode. The payment is more than 10,000. That payment is made in this year for your business expense. And that payment should have been made by way of prescribed modes. Have you made it through prescribed modes? No. So this payment will be hit by 40A3. This payment will be disallowed. Yes, the answer is correct. It will be hit by 40A3. Correct or no? Next one. It is a condition precedent to write off in the books of accounts the amount due from debtors to claim the deduction for bad debts? Yes, this is correct. To claim the bad debts as a deduction while claiming your PGBP income, those bad debts must be actually written off in your books. Only then they are allowed. So the statement given is correct. The statement given is true. Writing of the bad debt in your books is compulsory to claim the amount as bad debt. Yes or no? Next one. Failure to deduct tax at source in accordance with the provisions of chapter 17B. See, TDS provisions are given in chapter 17B of Income Tax Act. Provisions, TDS provisions. Okay. From the amounts payable to non-resident as rent or royalty will result in disallowance while computing the business income where the non-resident payee has not paid tax due on such income. Yes, absolutely correct. The entire amount of rent or royalty paid to a non-resident will be allowed. No, it will be disallowed because on that no TDS was deducted. And that particular fellow that non-resident has also not paid tax on that. What if he would have paid tax on that? Then you were not a assessee in default. 201 interest would not have been attracted, but still the payment would have been disallowed. Getting my point? So the statement is true. Now coming to question number 7. Okay. Now this is the first question which you are going to do. First question which you are going to do on what? On computation of PGBP income. Now the entire PGBP head, whatever incomes, whatever disallowances, whatever allowances which you have seen is going to come in this question. Okay. So this question number 7. Wait. Mr. Shivam, meaning the assessee is an individual. He is into retail trade. He is a retail trader. Means he is not doing any manufacturing. He is not doing any power business. Normal retail trade business is there. Of Cochin gives the following trading and P&L account. Which account? Trading and P&L account. Now, if you will see, the trading and P&L account is given for 31st March 2025. Meaning for the year 24-25, this was the trading account and P&L account. In the P&L account, can you see the profit? Now, this is a clear indication that from this profit only you are supposed to calculate your PGBP income. So, from the net profit as per books, as per P&L, whenever we calculate our PGBP income, that is not a direct method, that is an indirect method. So, examiner wants us to follow what? Indirect method in this question. Yes or no? So, above only, here only you write. Here only you write, since it is trading and P&L account, therefore, PGBP income will be calculated by following which method? Indirect method. Yes or no? Now, whenever we read such questions, no, see, first question will come in your examination. First question will come. 15th mark compulsory question. In that question, believe it or not, PGBP will be there. And this type of the format it will be given. But in that question, PGBP as per this method, other heads will also be given. So you are supposed to calculate PGBP also, other heads income, which is given there, plus 224 deductions, chapter 6 deductions will be given. Few adjustments regarding clubbing and set off provisions will be given. You will be told to calculate total income. But to calculate that total income, you will have to calculate all heads including PGBP. This question, same question can be framed, same question can be given in the exam, and they will tell you calculate the total income. So that time how to read the question, first read the information given above the table. Then forget the table, read the information given below the table. Then in the end, you are going to read this table. Hello. So how to read the question is also very important. What you are going to do? Information. Once this is done, come to the table. Okay. But wait, with this information also, no, we'll keep on checking the table. Because many information given here will be relating to something which is written in that table. Yes or no? So how we will study? How we will read the question? Information, and then table. This is the sequence. Please maintain this in all the questions, even in total income also and PGBP. Everywhere you are supposed to follow this way of reading the sum. Why I'm telling you, because see, whenever you solve such kind of questions, no, deliberately they'll make the questions big. Sometimes these questions go for 2-3 pages in your exams, and you are constantly turning the pages. And one information, believe me friends, one information, you will read it for at least 3-4 times. This question will not have more than 15 marks. If given in the exam for total income, it will not have more than 15 marks. 100 marks paper is there, which you have to attempt in 3 hours, meaning 180 minutes. Meaning for every mark which you are writing, you have just 1.8 minutes. So for 10 minutes, for 10 marks, you have 18 minutes. For 20 marks, you have 36 minutes. Getting my point? So for 15 marks, how many minutes? approximately 25 to 27 minutes. So within 25 to 27 minutes, the question has to be read properly. And your presentation, with presentation, your answer should also be written within those 25 to 27 minutes. And you won't believe if I tell you, in such type of questions, no, students usually spend at least 35 to 50 minutes on an average. Just imagine, will you ever be able to attempt the entire question? The things which you will be knowing, no. For those things, there will be no time remaining to attempt those questions. So you have to be very precise in your planning. And if you are taking more time in such questions, these questions are deliberately framed to eat your time. Put a timer that this is 15 marks question. I will not allocate a single minute beyond the time required. I will leave it. I will do other things. Then again I'll come to this. But if you will, if you will run behind this, no, I have to solve, I will crack this question. Trust me, the question will be easy only. You'll be knowing everything. But sometimes you'll be confused. And that will take your time reading the question again and again, reading the things again and again. Okay. So the manner in which we are solving this question, no, if you apply the same process, trust me, one information you will be reading only once. And with so much of confidence, you will be solving the question that every damn single thing which you have done is correct. You just have to make the calculations on your calculator. Your final amount will be there. You just have to present it now. Sure, we'll see it today. So first information, then leave the table. Come to information number 1, additional information. What they are saying? It was found that some stocks were omitted to be included. Some stocks were omitted to be included in both the opening and closing stock. Meaning that whatever opening stock appearing here, no, and closing stock appearing here, no, they are undervalued. They are undervalued. Means in the opening stock, 9,000 less recorded. Debit side, expense side. And on the right hand side, closing stock, right hand side means income side, 18,000 less recorded. So can I say your business profit, first business profit, gross profit, which you have brought down here, which will ultimately result into your net profit. From that gross profit only the net profit will be derived, no? So can I say your net profit is higher by 9,000 and it is lower by 18,000? Closing stock 18,000 not recorded. So gross profit was less by 18,000. Accordingly, the net profit is less by 18,000. Opening stock 9,000 not recorded. Accordingly, your gross profit is 9,000 higher and your net profit is 9,000 higher. Yes or no? This is wrong, no? Your net profit should not be higher by 9,000 because of undervaluation of opening stock. Your net profit should not be 18,000 lower, because of undervaluation of closing stock. So what you'll have to do? You'll have to adjust this undervaluation of opening and closing stock in your net profit only, no? No need to adjust in gross profit. Because if you're adjusting in net profit, automatically the effect will be given. Yes or no? So tell me. Now one simple question I am telling you. Simple question. Opening stock debit side item, credit side item. Debit side item. Debit side 9,000 not recorded. Means debit side 9,000 business expense not recorded. Meaning the profit is higher by 9,000. What should I do? I will have to reduce the profit by 9,000. Business related expense not recorded. Profit is higher. So I will have to reduce the profit, no? Hello, sir. unrecorded business expense, UBE, 9,000. Did you understand the thing which I told you? This 9,000 is UBE. This is an expenditure which should have been debited to P&L but was not debited to P&L. Because of that, the profit is higher by 9,000. I will reduce the profit by 9,000 by considering this as an expense related to business which was not recorded. So I will now reduce. Then the effect will be rectified. Yes or no? Same logic for closing stock. Closing stock 18,000 recorded less. So the net profit is also less by 18,000. So now I will increase the profit by 18,000 by considering this amount. This is an income side item. Income side 18,000 is less. So profit is 18,000 less. So I have to increase by profit. So this will be my unrecorded business side item. Business income. Income side item. Yes or no? Don't put any tick here. Put point number 1 in box. You'll do the same things which I'm doing. Huh? Why box? The moment you'll see the box, no, it will be an alarm that there is something given in this adjustment which you have to adjust in your profit. Don't have to forget it. This adjustment effect is yet to be given. Getting my point? Next one. Salary includes 10,000 paid to his bro, which is unreasonable to the extent of 2,000. Can I say? For Mr. Shivam, his brother is a relative. Relative means a specified person, related party. So any payment made for a business expense to a related party will be allowed as a deduction. But that payment should be reasonable. So are you incurring a business related expense? Salary? Yes. Salary you are giving to your brother? Yes. Will you get the deduction for that? Yes, I will get it. But that amount should be reasonable, no? How much salary you have given to your brother? 10,000. And what is the reasonable amount of that salary? Only 8,000. Meaning that how much extra you have paid? 2,000. That 2,000 extra salary paid to your brother should be disallowed. Wait. But this 10,000, no, entirely will not be disallowed. Out of that, 8,000 is still allowable. Where this 10,000 is recorded, they are saying that salary includes this salary. Meaning, can you see salary over here? 60,000. In this 60,000, that 10,000 of salary is included. So first what I will do, I will split this salary into two parts. Salary paid to others, salary paid to my brother. Wow, rhyming. Salary paid to others, salary paid to my brother. So tell me, how much salary paid to others? 50. Because out of this, 10 is paid to my brother. No. So to others, other employees, how much salary I have paid? 50. Now tell me, whatever salary which I paid to other employees, on that 48 is not applicable. That is my genuine salary, genuine business expense happening in my business. Can I claim the deduction for this salary? In my business, employees are there. To those employees, I am paying a salary of 50,000. Will that 50,000 salary be allowed as a deduction? 37.1 general deduction. This 50,000 is allowable. So put a tick mark over here. Out of 60, this 50 is allowable. Okay. Hello, sir. Now, out of this 60, 10,000 which was paid to your brother, this 10,000 would have been allowed fully. Even this was allowable. Because in your business, your brother is working as an employee. So, even to your brother, whatever salary you will give, it is an allowable expense. But that should not have been unreasonable. Out of this 10,000, only claim that salary which is reasonable, 8,000. And the 2,000 which you have paid to your brother, which is unreasonable amount, will be disallowed. Will you remember this, sir? So in short, can I say out of 60, 58 is allowed, only 2,000 is disallowed. Now that 2,000 which is debited to P&L along with the salary should not be reduced. So whenever you will calculate your PGBP income from the net profit. In that net profit, you have to add that 2000. That's it. Getting my point? No need to give any effect to 58,000 because 58 was allowable. It was supposed to be reduced. It is reduced. No need to give any effect to that. Hello, sir. Now put a tick mark, proper tick mark on point number 2, like this. You are not going to see this information again in your entire lifetime. Whatever effect which was supposed to be given to this, you have already given. Hello, sir. So whatever adjustments will be there, no, on which you have put a tick mark, you are not going to see only. Why? Because the effect is already given. Your time will be saved. You are not going to read it again and again, again and again. Getting my point? Next one. The whole amount of printing and stationery, whole amount, oh my God, whole amount of printing and stationery was paid in cash by way of one-time payment to Mr. Ramesh. So, printing and stationery, whole amount was paid in a day to a party, and that too also in cash. Now check how much was the printing expense. Printing and stationery, 23,200. Can you see? This whole amount was paid in a day to a person, Mr. Ramesh. Can I say? In a single day, single payment made to a person, and the amount of that single payment is more than 10,000. Hello? It has to be paid by way of prescribed modes. But did you pay by prescribed modes? No, you paid it by cash. Will this amount be your business expense? Yes, this is your business expense, but will it be allowable? No. As per 40A3, now this will be disallowed. So put a cross mark. This will not be allowed as a deduction. Sure? Put a tick mark on information number 3. No need to read this information again in your life. Okay, next one. The depreciation provided in the P&L account 1,05,000 was based on the following information. Opening balance of plant and machinery WDV as on 31st March 2024 minus depreciation for previous year. Last year closing WDV minus last year depreciation is already done, and this is the opening WDV for current year. They have given you the opening WDV after reducing depreciation for last year from last year's closing WDV. So last year closing WDV was there. From that depreciation was reduced. Whatever closing WDV which was remaining as on the last day of last year is brought as opening WDV in this year. And how much is that amount? 4,20,000. So can I say this is the opening WDV 4,20,000 of the plant and machinery block? Now in this block, a new plant falling under the same block was bought on what date? 1st July 24 for 70,000. Is it purchased before my birthday? Do you remember my birthday? 4th October. Prior to that purchased, and nothing mentioned, put to use also on the same day. So is it put to use before my birthday? Yes. Will it be used for 180 days or more? Yes. So on this, full rate depreciation will be available. Yes or no? Next one. 2 old plants sold on 1st October 24 for 50,000. Sir, for selling, no, don't see my birthday. Whenever you will be selling the assets, no, from the block, don't see my birthday. Always see when the asset is acquired. So whenever you are selling, meaning in October if you are selling, tell me these 2 plants will be there in the end? No. The plants will not be there in the block. So on these plants, no depreciation will be there. And the amount recovered on sale of these plants will be adjusted out of the cost as what? Deletions. So after adjusting this amount, whatever balance remains against that, whatever assets remains for this asset, this much is the cost, will be claimed in the form of depreciation. So can you calculate the depreciation? Yes, very easy, very easy. See what you will do. 4,20,000 opening WDV. In this you will add additions. What is the addition, sir? 70,000 rupees additions, no? $70,000. And this is greater than equal to 180 days addition. Less than 180 days any addition, no addition. And now I will do a deletion of 50,000. You should get 4,40,000 as the depreciable value of the block of plant and machinery as on the last day of this previous year. Now on this, the depreciation rate will be applied. Wait, tell me, on the full value, full rate will be applied? Yes, because in this value, there is no assets which are remaining as on the end of the year, which was purchased in this year and put to use for less than 180 days. If that was the case, the cost of that asset out of this value would have been separated. On that, we would have calculated depreciation at half rate. But if that is not there, so on this entire, I will apply full rate. Yes or no, sir? So on this, if I will apply full rate, meaning how much? 15%. So my depreciation here will be 66,000. This depreciation I have calculated by applying the provisions of section 32. Yes or no? So this is the depreciation under section 32. This should be allowed, sir. This should be allowed, no? Now go and check the P&L. How much depreciation is debited? 1,05,000. Meaning you are eligible to get the deduction for depreciation of 66,000 only. And you have claimed a depreciation of 1,05,000. That depreciation you must have calculated as per books. Method will be different. Rate will be different in your books of accounts. By applying different rate, different method, this depreciation was calculated in the books and it was debited. Tell me, is this depreciation allowable or 66,000 is allowable? 66, no? So why have you reduced this? This will be disallowed, add back to profit, and 66,000 which was not recorded, so not allowed, we will allow it separately. Unrecorded business expense. Will you remember this? So 1,05,000 cross, I will add back this depreciation to profit. This depreciation should not be allowed. If reduced from the profit, I will add back to the profit. And this 66,000 will now be treated as my unrecorded business expense. Because this 66,000 of depreciation was not recorded above, so this is not allowed. I will allow it separately now. Okay. Put this into box. Now many people, what they will do, you know, they will take the difference of 1,05,000 and 66,000. What is the difference? Come on, tell me first. 39,000 difference is there, no? Hello, sir. That 39,000 depreciation extra you have claimed over there. Hello. So do one thing. Split. Out of that, 66 is allowed because that is a depreciation as per section 32. But excess 39 which you have claimed, which you have not calculated as per 39, should be disallowed. Add 39. So directly you can add 39 also, but I would rather prefer not to do that. Because sometimes the depreciation as per books is lower. Hello? Or only that depreciation is given, no adjustment, no depreciation in the adjustment. What to do in that case? Should it be allowed, disallowed? Do one thing. Whatever written in P&L, allow that depreciation fully if no information given here. Meaning that the depreciation as per books and depreciation as per income tax act, both are same only. So if depreciation given in P&L only and no information given to calculate that depreciation, then the depreciation given in P&L will be allowed fully. Hello, sir? Or what if no depreciation debited above, but only the information to calculate depreciation was given. Calculate that depreciation and allow it separately as unrecorded business expense. Hello, sir? But what if the depreciation given above also and there are informations given to calculate the depreciation as per section 32? So whatever depreciation which you will calculate as per section 32 will be allowed, will be reduced. And whatever depreciation which you have already debited, hello, which was not as per Section 32, it was as per books. That should not be reduced. Add that back. That is disallowed. Add it back. And this is allowed. Reduce it. Simple. Will you be able to do it? Sure. Put this information in box. Now, rent and rates includes GST liability of 3,400 paid on 7th of April 2025. First of all, tell me GST liability meaning your tax, GST. GST is a tax related to your business. No, you are into trading business. You are doing buying and selling of goods. So whenever you buy and sell the goods, you are supposed to pay GST. So GST is a tax which is supposed to be paid as a result of doing this business. If I was not doing this business, I was not supposed to pay GST. So GST is a tax related to my business. Yes. Should it be allowed? Yes. But it will be allowed only on payment basis, subject to 43B. Same year this should be paid in 24-25 only. Is it paid in same year? No, it is paid on 7th of April. Still it will be allowed. Why? Because it is paid on or before the due date of filing your ROI, which can be either 31st July or it can be 31st October in some cases. Yes or no? So have you paid your GST, meaning the taxes related to your business? Have you paid that in this year? Yes. Or on or before the due date of filing your ROI? In the given case, yes, on or before the due date of filing my ROI, I have already paid it. So this will be allowed. But this GST was included in rent and rates above. Can you see rent and rates how much? Rent and rates 36,000, two splits. Out of this 3,400 is a tax, GST. Yes or no? This was for this year only. Hello? And paid in this year? No. Next year, but on or before the due date of filing ROI. So this is also allowable. So this is allowable. And what about the balance? Balance rent and rates amounting to how much? 32,600. If nothing is mentioned, then this is also business related rent and rates. Paid in this year only. Will be allowed in this year. Understanding? If it is a rent for the building, will be allowed under section 30. Rates of the building allowed under section 30. Getting my point? And GST is also allowed. Balance amount is also allowed. Next one. Put this information a tick mark. Other general expenses include 2,000 paid as donation to a public charitable trust. Wait, if this donation would have been made to approved scientific research association, etc., then it was an allowable expenditure under PGBP head, provided you are not following 115 BSc. Hello, sir. But is it a donation made for scientific research, etc.? No, the donation is made to public charitable institution, sir. Public charitable institution, donations made are not the expenses related to your business. And by the way, for this donation, you will get the deduction under 80G from your GTI. So if this donation itself is not related to your business, why to allow this? And this amount was included in your general expense. So can you see general expenses? In that 2,000 rupees donated to public charitable trust is also included. Will this 2,000 be allowed as your business expense? The answer is no. Under the PGBP, this will not be allowed. But from GTI, you can take this amount as a deduction under 80G. Understanding? And what about the balance? 5060. Can I say this will be the real general expenses of my business? So general expenses of my business will be allowed as 37.1, no? So this will be allowed as a general deduction, 37.1. Sure. Now all the informations you have done. Wait, read further. You are required to compute the profits and gains. Profits and gains under presumptive taxation under 44 AD, and you are also required to compute profits and gain as per the regular provisions of the Act, assuming that he has exercised the option of shifting out. Shifting out means 115 BAC not followed. Wait. Please pay attention over here. Two types of profits you are supposed to calculate. One, regular profits. Normal type of profit, PGBP income. Meaning business incomes minus business expenses, disallow some items, then add less, add. Normal type of PGBP income calculation will be done normally. You will take all the incomes which are taxable under the PGBP head. You will take all the deductions available under PGBP head. You will not take the deduction for those items which are disallowed. Getting my point? This is normally PGBP calculated. One section is there, 44AD, which we are going to do after solving these questions under the miscellaneous part. Yes or no? So miscellaneous provisions are still remaining. So there you will come to know about 44AD. So 44AD will also give you a method to calculate your PGBP income on a presumptive basis. So you follow that method, calculate the profit as per 44AD method. That is your presumptive. That profit will be presumed that it is your business profit. So for Shivam's business, you are supposed to calculate both the profits. One, profits regularly calculate as per the normal provisions. And two, calculate the profits of the same business by applying 44AD provisions. In this question, no, right now, we will be calculating the profits regularly by following indirect method. Hello, sir. And when I will teach you 44AD, no, then again we will come to this question. And for Shivam, for the same business, we will be calculating profits as per 44AD also. Getting my point, sir? Right now, our focus will be only to calculate regular PGBP income regularly for Mr. Shivam. Later on 44AD we will learn, then we will again come to this question. Sure, sir? Everyone? Now, assume that, underline this part, assume that whole of the amount of turnover received by account pay check or use of electronic clearing system through bank account during the previous year. Okay, no? Please write down. This information will be relevant while determining profits under section 44AD. That time this information will be relevant to us. Okay. Right now we don't have to consider this. Now see, information done? Yes, sir. Information done? Yes, sir. And with this information, we were seeing the table also. But still, few items in the table are remaining. Now, finally, we are going to read the table. Yes or no? First item, opening stock is given, purchases is given, gross profit is given, then sales is given and closing stock. Whatever is written in the trading account, no, are direct incomes of the business, direct expenses of the business. Your business will give you the first income in the form of gross profit. So whenever you earn gross profit, no, that gross profit is the first and the direct profit of your business, which will then enter into what? P&L. And then it will become dirty. This is not purest. Now that gross profit will be converted into net profit. And that net profit we are cleaning and we are determining what? PGBP income. Meaning that to calculate that net profit, no, whatever gross profit was used, that was your business income only. Taxable under PGBP head. So if gross profit has to be taxable under PGBP head, meaning to calculate that gross profit, whatever amounts were credited to trading account, whatever amounts were debited to trading account will be fully allowed. So what you will do? In the trading account, whatever items you are seeing, no, allowed. Meaning the gross profit is your PGBP income. Understanding, everyone? So, sir, this is allowed. Meaning this gross profit is allowed. Yes or no? This gross profit is your business income. will be taxable under the Act PGBP. So to calculate the gross profit as your business income, you have to allow all the things credited in the trading account and all the things debited to trading account. Hello, sir. Manufacturing trading account. What do you record? All the direct expenses and direct incomes in the business, in the manufacturing, in the trading activity, whatever direct expenses and direct incomes you are receiving from your main business activities, no, those are recorded. So main business activity recorded, all the incomes, all the expenses of this main business activity recorded over there has to be allowed under PGBP head. Sure, no? So trading account, nothing will be disallowed. Okay. Now wait. Purchases is there. Purchases. Can you see purchases? For that, they will give you an adjustment. Out of the purchases, 50,000 rupees of purchase was made in cash, paid in a day to a single party. Then the entire purchase will not be allowed. Then out of that purchase, 50,000 paid by way of prescribed modes, other than prescribed modes, will be disallowed as per 48.3. But that does not mean that the purchase is not your business related expense. It is your business related expense. Getting my point? Now they will tell you, in the purchases, transportation charges were also included, amounting to 34,000 paid in cash. Transportation charges up to 35,000 can be paid by any mode. So 34,000 paid in cash, allowed? Yes, allowed. So in the purchase, whatever transportation charges, 34,000, that is also allowed. Balance charges also allowed. They can give some adjustments for those trading items also. That time you have to be a little bit careful, okay, no? But no need to be careful, because by that time you would have already completed this thing. So effect would have been already given over there. Getting my point? Now whatever is remaining, no, everything allowed, allowed, allowed. Sure? Come to P&L now. P&L credit side. Can you see gross profit? P&L credit side. Can you see gross profit, sir? So the gross profit is the first profit of your business. That is your business income. Tick mark, meaning business income. Now, go to income from UTI. You are getting income from UTI, meaning that Unit Trust of India. You might have invested in Unit Trust of India, UTI. And you would have got units of UTI. And on those units, you are getting income in the form of dividend. See, you buy the shares of the company, no? When you buy the shares of the company, you become a shareholder. So company will give you income on your shares in the form of what? Dividend. So likewise, when you invest in mutual fund, when you invest in UTI, that mutual fund or UTI will give you shares, but those shares will not be known as shares. Those shares will be known as units. On those units, you are not going to get dividend, you are going to get income. That income is as good as dividend only. Yes or no? Hello, sir. So, is it your business? Is it your business to earn this type of income? Or your business is to trade? Trading? Retail trade? No. So, in your retail trade, is it your business income? No, this is not your business income. Cross mark. Then, sir, which income is this? This is your income from other sources, and there it will be T for taxable. Under the head IFRS you will take, but there also you will be taxing it. Okay, next one. Credit side is over. Now come to debit side. Salary already done. Rent and rates already done. Now check interest on loan. Are they saying that this is a personal loan? This is a housing loan? Anything about that loan? No. If nothing is given, I will assume that it is my business loan. Interest on business loan. 36(1)(3) allowed. If not mentioned that it was payable to specified lenders, not paid in the current year, not paid on or before the due date of filing ROI, then I would have attracted 43B, I would have disallowed. Yes or no? If no such informations are given, meaning that the interest for this year was paid in this year, that's it. Is it my business related loan? Yes. For that loan, interest is given? Yes. That interest is my allowable expense. I will claim it as a deduction. 36(1)(3). Depreciation done, printing and machinery done. Then postage and telegram. In your business, Sometimes you have to send couriers. Sometimes you have to send letters. So your postage and telegram expenses are happening. That is also your general expense in the business. General deduction 37.1. Yes or no? Next one. Loss on sale of shares. Ayyo. Your business is not to buy and sell the shares. If buying and selling of shares was your business, then this loss would have been your PGBP, business loss. We would have allowed. But definitely, if you are in a retail trade, you would have bought these shares as your investment, as your capital asset. And by selling the capital asset, in the short term, you incurred a loss. So that is your short term capital loss will be considered under capital gain head. This is not the loss happening in the course of your retail trade. This is not the loss incurred in the course of your business or profession. So if this is not a loss which is incurred in the course of your business or profession, should this loss be allowed while calculating profits of your business? No, this will be disallowed. Cross mark. We will consider this under the head capital gains. This is a capital loss to be adjusted out of capital gains income, not to be adjusted while calculating business income. Why you have reduced? Add it back. Hitting my point. And other general expenses we have already seen. Now on your calculator, you are supposed to take 50,000. You will be having your calculator in your hands. But before that, I must warn you, you will be pressing only those buttons which I am telling you to press on your calculator. No other button you will press. If you will do it, I'll directly jump out of your screen. Take the calculator from your hand, keep it on the ground, and I will stand on that calculator. Don't press any other button. But before that, do you remember indirect method how to calculate? Net profit. Please remember the format. Net profit, add, less, add. Expense, income, expense debited but disallowed. Add. Incomes, credited but not taxable. Less. Expenses, not debited but allowable. UBE, less. Yes or no? Then incomes, not credited but taxable as PGBP. Add them back. Add, less, add. Everything should happen in the profit only, no? So take this profit on your calculator. 50,000 on your calculator, everyone. Now go to the debit side. Can you see debit side? Debit side, whatever expenses are cross, meaning disallowed, should not be reduced. You have reduced them, no? We have to add them back. So first you will add 2,000 salary paid to brother. Add in your 50,000, add 2,000 of salary. Then add depreciation 1,05,000. Then add printing and stationery 23,200. Then add loss on sale of shares 8,100. Then you will add other general expense of 2,000. Everything which was debited and disallowed to be added to the profit, you have already added. Now something which is credited but not taxable under PGBP, you have added it, you now have to reduce it. Yes or no? So reduce what? 2,400, only one item which is not taxable as your PGBP income was included in business profits. You are reducing it. Now you will take that to IFOS. Getting my point, everyone? Hello, sir. Add less, done. Now, do you have UBE, unrecorded business income expenses, meaning those things which are to be reduced out of your business profits but not reduced? Number one, opening stock 9,000, reduce 9,000 opening stock. Number two, unrecorded business expense, depreciation, reduce 66,000 depreciation. All the UBE done. Now UBI, unrecorded business income, 18,000 closing stock, which was not recorded on income side. Yes or no? Add 18,000. You will get one answer. Within less than 1 minute, we got this answer on our calculator. This is your PGBP, my dear friends. Saw the magic? Now just the presentation. Whatever you have done on your calculator, no, you will have to make a format. Name of the assessee. What was the name? Mr. Shiva. Individual ROR, PAN, dash, previous year, assessment year, computation of taxable income under the head PGBP. Okay. Particulars. Rupees, 2 column. First you will write net profit as per P&L. Taxable, last column. Second column. How much? 50,000. Then add expenses debited to P&L but not allowable under PGBP head. Underline. Now you will write down salary to brother. Unreasonable amount. In the bracket you will write disallowed as per 48(2). First column you will write 2000. Next one, depreciation debited. Depreciation as per books of accounts. In the bracket you will write down not as per section 32. Amount you will write 1,05,000. Inner column. Then what you will write? Then you will write postage and stationery. In the bracket you will write disallowed as per 48(3). Amount is more than 10,000 paid in a day to a single party in any mode other than prescribed modes. Hence disallowed as per 48(2). Every damn single thing you will write there itself in the particulars. No need to go and write down different notes and all. Otherwise, if you'll forget any notes, no, marks will be deducted for that. So that you don't forget any notes, write down there only, no, with that item. What was the reason for adding? What was the reason for reducing? Yes or no? Then what you will write down? Loss on sale of shares. In the bracket you will write down not a loss incurred in the course of business or profession. It is a capital loss to be considered under capital gains. Bracket close. First column you will write 8,100. Then what you will write? You will write donation to public charitable trust included in general expenses. In the bracket you will write down not a business related expense eligible for deduction under 80G subject to certain conditions. Bracket close. You will write down 2,000. Now first column, whatever amounts you have written, no, add. Total you bring in the final amount. So 50,000 plus this amount, you will get a total. Now in this total, you are supposed to reduce less. Less what? Less items credited to P&L but not taxable under PGBP head. Underline. In that, one item will only come. Only one item. That is income from units of UTI. Directly outer column. How much? 2,400. If other items would have been there, I would have written in the first column. I would have done the total, and the total I would have reduced in the last column. Yes or no? But this was the only item which is to be reduced. So directly outer column 2,400. What you will write in the bracket? This is an income from taxable under the head income from other sources. Hence we are reducing from the profit. Yes or no? Then you will get a total. Now from that total, what you will do? Undervaluation of stock. Reduce the items to be reduced out of the profit but not debited in P&L. Underline. Next, you will write undervaluation of opening stock. First column 9,000. Then what you will write? Depreciation calculated as per section 32. Depreciation under section 32. Underline. Calculate the depreciation in the same way. There only. You will get the amount of 66,000. Write down that amount of 66,000 in first column. 66,000 plus 9,000 total will go to the second column. Reduce that. You'll get again one amount. Getting my point? Then what you will do? Then you will take UBI. Don't write these UB and UBI over there. This is just for the sake of reference. In our question, in our solutions, we are writing this. What will write? Items not credited to P&L but taxable under the head PGBP, or items to be considered as your business income but not credited in P&L. Whatever you are comfortable, write down. Underline. In that you will write undervaluation of closing stock. Directly outer column 18,000. Now last column total final amount should be 1,30,900. Sure? See how easy this head is. Process will remain same. But now in some question, details will be twisted. Because there are many things in PGBP we have studied, no? So those all things cannot be covered in one question. Now different questions will be there covering different aspects of PGBP head. So the more questions you will solve, the more different aspect of PGBP head will be covered. In few things you will have super comfort. In few things you will have a little bit of problem, but you will be able to manage it. in few things you'll commit mistake. Focus on those things. Those areas require your attention. Getting my point, everyone? Shall we go to the next question? Okay. Next question is question number 9. Question number 9. Okay. We will start now. Ready? Mr. Raju. Question number 9. Mr. Raju. First of all, he is an individual. He is a manufacturer at Chennai. Manufacturer means what? There must be some new plant and machinery. On that depreciation he can claim. But wait, if it is given in the question that he is not following 115 BSc, only then. But if it is given in the question that he is following 115 BSc, then even if he is a manufacturer purchasing new plant and machinery, then he'll not get any deduction for additional depreciation. Okay. Now his manufacturing, trading and P&L account is given, meaning that indirect method will be followed to calculate his PGBP income. Right? Next one. Forget about this table now. Come to additional information. Number 1. Administrative charges include 46,000 paid as commission to brother of the assessee. The commission amount at the market rate is 36,000. This is 48 to disallowance. Administrative charges. Can you see administrative charges? 3,26,000. In this, 46,000 commission given to the brother is also included. So first we'll write down commission to brother. How much is that? 46,000. So can I say balance 2,80,000 will be your normal administrative charges happening in the business? That is going to be allowed. No problem in that. 46,000 commission should also be allowed. If it was paid to someone else, it would have been allowed fully. But since it was paid to brother, who is a related party, and the amount at market rate is 36,000 only, then why have you paid 10,000 extra to your brother? The 10,000 extra which you have paid in excess of reasonable amount will be disallowed as per 48(2). Yes or no? So out of this 46,000, 10,000 which was extra in excess of reasonable amount will be disallowed, and the balance 36,000 will be allowed. Everyone got this? Simple? Very good. Now put a tick mark. The assessee paid 33,000 in cash. Touch wood, it is paid to transport carrier, meaning transport charges, transporter. Any payment made up to 35,000, any mode, it is allowed. So now this payment was made in this year. Okay, no? The payment was made in this year. So this amount is included in manufacturing expenses. Assume that the provisions relating to TDS are not applicable on this payment. Thank God TDS provisions are not applicable. Otherwise, there would have been more complications here. So assume that TDS provisions not applicable. So TDS not deducted. In your manufacturing wages and expenses, manufacturing, here no, that 33,000 was included. Now tell me that 33,000 is paid to the transporter, no? even if it is paid in cash, will not be disallowed as per 40A3, since it is a transport charges. Up to 35,000 paid by any mode, it is allowed. So this will be allowed. And what about the balance? 5,37,000. That is your normal manufacturing wages and expenses. Even that will be allowed as a deduction. Got it? So put a tick mark on the adjustment number 2. Now a sum of rupees 4,000 per month was paid as salary to a staff throughout the year, and this has not been recorded in the books of accounts. See, in your business, there was an employee to whom you were paying 4,000 rupees per month salary. Throughout the year you paid, meaning for the full year you paid a salary of 48,000. Was it your business related expense? Yes. But you forgot to record it in the books. Meaning this salary is your business expense, should be allowed as a deduction, not recorded. Should be allowed separately now. So this will be your unrecorded business expense amounting to 48,000. So you will put this amount, put this information in box. You will write down 4,000 into 12 is equal to 48,000. And this 48,000, my dear friends, will be your unrecorded business expense. Yes or no? Bank term loan interest actually paid up to 31st March 2025 was 20,000, and the balance was paid in November 25. Now check the bank term loan interest. How much is that? 60,000. Out of that 60,000, 20,000 paid till 31st March, meaning 20,000 paid in this year only. See, bank is a specified lender, okay? Specified lender, you are taking a business loan. On that, if you are paying interest, that interest will be allowed if it is paid in this year or on or before the due date of filing ROI of this year. Getting my point? But when did you pay the balance 40? This year? No, next year, and even after the due date of filing your ROI. Your due date of ROI would have been 31st July or 31st October. Even if you would have assumed that the due date is 31st October, still after 31st October it is paid. So that 40,000, which is an interest for this year, payable to a scheduled bank, meaning a specified lender, was not paid in this year, not even paid on or before the due date of filing ROI, will be disallowed as per 43B. In this year, it will not be allowed. It will be allowed in the year in which it is actually paid. Yes or no? So 20,000 which was paid in this year only will be allowed in this year. But 40,000 could not be paid on or before the due date of filing your ROI, will not be allowed as a deduction in this year. This will be disallowed as per 43B. Will be allowed in the next year's business income because it is paid in next year. Okay. Next one. Put a tick mark. Housing loan principal repaid. Okay, housing loan principal repaid was how much? 50,000. And it relates to residential property. Oh my God. It relates to residential property acquired by him last year for self-occupation. Can I say this housing loan repayment is for self-occupied property, SOP, which you would have shown under which head? You would have shown under the head income from house property. This property you acquired last year, and the property is your SOP. Where you would have shown this property? Under PGBP? No, this property would have been in your house property head. There, under the head house property, this property was shown. So whatever details of this property is given for the house property head and not for PGBP head. Now you have taken a loan for purchase of this house property. That loan repayment of 50,000 is happening. Friends, loan repayment of 50,000 is not allowed as a deduction under house property head. Interest on the housing loan is allowed as a deduction there, no? Hello, sir. So, was there any interest on housing loan? Yes, 23,000 interest on housing loan was there. So this housing loan was taken from Canara Bank. These amounts were not dealt with in the P&L account. Thank God these amounts were not given in P&L account. If these amounts would have been given in the P&L account, I would have disallowed these amounts. I would have to add it back. Thank God these amounts are not given in P&L. Separately, I will consider these amounts. Okay. So no adjustment in my profit is required. Correct. So what I will do? This 23,000 interest. This 23,000 interest I can go and claim under section 24 clause B. So this entire information is about my income from house property head. Income from house property head. There will be SOP which I will write there. In that SOP, the annual value I will take as nil. NAV will be nil. No municipal tax deduction. Do you remember all these things? But you will get the deduction for interest. Entire interest will be allowed there. Wait. 24B interest deduction for SOP. Only if 115 BAC not followed. If you follow 115 BAC, then this interest will also not be allowed. Because interest relates to SOP is not allowed as a deduction if the assessee follows 115 BAC. Do you remember that? 15,000 years ago when dinosaurs were alive, that time we did that chapter. Sure? Very good. Now see, wait. This interest we have already did. So only if 115 BSC followed. What about this 5,000? This 5,000 is your interest or this 5,000 is your principal repayment? For principal repayment, no deduction under house property head is available. But the principal repayment can be claimed as a deduction under section 80C. But it will be allowed under section 80C only if 115 BAC is not followed. Because if you follow 115 BAC, no, all the chapter 6 deductions are also not given. 80C to 80U, no deduction given except for 3 deductions. 3 deductions still you will get. You will get 80 CCD subsection 2, you will get 80 CCH subsection 2, and you will get 80 JJAA deduction. Other than these 3 deduction, no other deduction of chapter 6A will be available. 80C you will miss, 80D you will miss, 80G, all the deductions of section 80 will not be available if you follow 115 BSc. But if you don't follow 115 BSc, you can claim this amount of principal repayment of housing loan, of that housing loan which relates to that property which is assessed under the head house property. Housing loan of that property repaid. Which property? Housing loan of which property repaid? Housing loan of that property which is assessed under the head IFHP. Is this property assessed under the head IFHP? Yes. So the housing loan repayment of this property can be claimed as deduction under 80C. But for that, you should not follow 115 BSc. Getting my point? Now in the question, no, last part, what they are going to tell you that we have to understand. Last, no, they are saying, see, compute the total income, assuming he pays tax under default tax regime. Meaning, if he is following 115 BSc, then under the head house property, he will not get interest also. House property head income will be nil. And that 80C deduction also he will not get. Getting my point? From GTI, 80C will not be allowed because he is following 115 BSc. That same question I will give you to solve, assuming that he is following 115 BSc. Got it, no? Let's see what happens then. Okay. Did you understand this information? No adjustment for this information should be given to the profits because nothing written here is recorded in P&L. Okay. Don't touch your profit for this information. Depreciation allowable under the Act is to be computed on the basis of following information. Now pay attention. Plant and machinery WDV as on 31st March 24 means last year's closing WDV minus depreciation for the last year already happened. And closing WDV as on the last day was 11,90,000 after depreciation. So that will only become opening in this year, no? So what was the opening in this year? Come on, tell me. 11 lakh 90 is the opening WDV of plant and machinery. Opening is 1190. In that there are additions during the year and used for more than 180 days. So you will add 2 lakh in that additions, and this addition is greater than or equal to 180 days. There is no addition of less than 180 days. Okay. Is there any deletions? No. No deletion, but they are saying that the total additions happened during the year is 4 lakhs. Meaning that if total is 4 lakh, then out of that 4 lakh, this is 2 lakhs. So what about the balance 2 lakhs? Balance 2 lakhs also addition in this year. So 4 lakh is the total additions in this year. Out of that 2 lakh is addition during the year put to use for 180 days or more, meaning that there are additions of 2 lakhs in this year, which is used for a period of less than 180 days. And my dear friends, there are no deletions. No deletions means nil. Can you get the total over here? Yes. 15 lakh 90,000. Now out of this 15 lakh 90,000, no, on 2 lakhs, you are going to calculate depreciation at half rate, 15% into 1 by 2. And on the balance 13 lakh 90,000, you are going to calculate the depreciation at full rate. This is the normal depreciation which you are calculating, right? No? Come on, tell me. 2 lakh into 7.5% will be 15,000. And 13 lakh 90,000 into 15%. How much is this amount? Tell me fast. 2 lakh 8,500. Okay. 2 lakh 8,500. Wait, add both of them. So 2 lakh 23,500. This 2 lakh 23,500 is your normal depreciation. Normal amount of depreciation. And sir, additional depreciation also would come if assessee does not follow 115 BSc. So if in the same question they would have given that assessee is not following 115 BSc, assessee is not following 115 BSc, then we would have calculated the additional depreciation also. Hello sir. We will calculate, but we will not claim. Because the assessee is following 115 BSc, no? But let's calculate, no? How much is the amount? Additional depreciation is allowed at the rate of 20% on the actual cost of that new plant and machinery purchased and installed in this year. Yes or no? So how much new plant and machinery purchased? 4 lakhs. On that entire 4 lakhs, you are going to get additional depreciation. But on that entire 4 lakh, you are not going to get full 20% because out of that, 2 lakh is the plant and machinery acquired during this year and put to use for less than 180 days. On that, the additional depreciation cannot be 20%. It has to be at half rate. So what you will do? Additional depreciation on 2 lakhs at full 20% you will calculate. That will be 40,000. And on another 2 lakhs, you will calculate 20% at half rate. That will be 20,000. So your additional depreciation total will be 60,000. This you would have claimed along with normal depreciation if you were following. No, if you were not following 115 BSc, but you are following 115 BSc, so this will now not be allowed. Only this will be allowed. Getting my point? Are you following 115 BSc? Yes. So this interest will also not be allowed. This ATC deduction is also not allowed. Without taking all these deductions, you are supposed to calculate your total income. Without taking these benefits, you are supposed to calculate your total income. Getting my point, everyone? Now see, we have completed all the adjustments. Okay. Note, ignore application of section 14A for disallowance of expenditure in respect of any exempt income. Okay, no problem. Next one. Can you see your manufacturing trading account? In your manufacturing trading account, whatever is written, everything is what? Allowed. Everything is allowed means your gross profit is your first business profit. Yes or no? So gross profit is your business income. Done. Administrative charges we have already done. Next one, dividend from domestic company. Come on, tell me, is it your business income? Are you in the business of earning dividend income? So this is not your business income. This is your income from other sources, will be taxable over there. And now if you are having agricultural income is also not your business income. Yes or no? This is also not your business income. This will be your income from other sources, and there it will not be taxable. You will claim it as exempt under section 10(1) because agriculture income is fully exempt under section 10(1). Okay? Sure? Very good. Now coming to the debit side, SGST penalty. No, wait, here. Administration, okay. SGST penalty. SGST means state GST. So you might not have fulfilled any criteria or the provision of SGST law. So for contravention of SGST law, this penalty would have been charged. If nothing is mentioned that it is compensatory in nature, I will consider that it was for the contravention of GST law. So any penalty for the contravention of law, is it allowed or it is disallowed? It is disallowed. I have already told you this. Everyone. Now the GST which you have paid is a tax on your tax which is related to your business. So that GST will be allowed as a deduction. General expenses will also be allowed as a deduction. Interest already done. Depreciation. This 2 lakh will not be allowed, sir. Depreciation we have already calculated here. How much? 2,23,500. This will be allowed in the form of unrecorded business expense. This depreciation is allowable. Now did you see? Did you see the depreciation which was debited was only 2 lakhs. Now the amount calculated is 223,500. Now what will be the difference? 23,500. What will you do with this? You will add or you will less? You will less. Because already debited 2 lakh, if you allow it. So out of this 2 lakh is allowed. More 23,500 is to be allowed. So in your profit, take 23,500 as differential amount, take as a deduction. You can do that also. But people usually get confused. Do one thing, no. Whatever debited, is that allowed? No. Add it back. Whatever is calculated, is that allowed? Yes. But is it reduced? No. Reduce it. That's it. Keep the thing simple, please. Okay. And whenever you will solve the questions, no, from ICAI module and all, you will be given such kind of net effects only. So if you look at the question solution and then you will try to solve, no, you will never get correct answers. Never. Because there are some ways which are different, which we don't do. Getting my point? But I am trying to give you the, give you the feeling of that also. This can also be done. Sir, you said that 223,500 should be reduced. They have reduced only 23,500. Bloody, that means they have not added 2 lakhs. They have not added 2 lakhs. They just have reduced the balance, differential amount of depreciation. If they would have added 2 lakhs, no, they would have to reduce 223,500. That means that 2 lakh out of this is allowed and 23,500 extra allowed. Got it? How we will do? How we will do? 2 lakh allowed, not allowed, add back. 223,500 allowed, yes, reduce, because it was not reduced. Reduce this. Sure. Now pay attention. We have completed everything. Okay. On your calculator, which amount you will take? Any other amount if you are going to take, you are gone. Only take 5 lakhs. Done? Wait, we are calculating PGBP. Directly, no sir, this kind of question we always calculate PGBP. But the examiner is not telling you to calculate PGBP, he is telling you to compute total income, assuming that tax is payable under default tax regime, meaning 115 BSE followed. Okay. Now if you will directly calculate PGBP, you are gone. Do you know how to calculate total income? Yes, sir. Salary, house property, PGBP, capital gain, IFOS, total, GTI, chapter 6 deduction, total income. Yes, you have to apply the same process over here. So first what you will calculate? Salary. Tell me, Raju is a manufacturer. Is he earning any salary income? If the details were there, we would have actually read those details. So in the question, there is no detail given about that Raju is earning any salary income. So under 5 heads, Raju will not show any income under salary head because he is not earning any salary income. So salary income for Raju will be nil. Salary income for Raju will be nil. Nil is what? First head income. Now tell me, what will be Raju's house property income? Raju has only one SOP. Annual value exempt. Hello. GAV nil. Municipal taxes paid. Even if municipal taxes paid, not allowed as a deduction. In this question, municipal taxes are not given. If I would have been your examiner, no, if I would have framed this question, I would have given those details also. Full details to calculate your house property income. The maximum confusions I will do, no. The more you will be afraid of the question. There is nothing. See, whatever we have studied, no, from those things only the question is framed. There is nothing new which we are doing, but still we get afraid of these type of questions. Why? We don't know how to read the question. And even after reading what we are doing, we get lost. Go very systematically in the same manner in which I am solving the question with you. Because I need all of you to be this much precise and follow the same process. If you will solve first question, no, it will take much time. Too much time. Second question you will solve, no, it will take comparatively less time. Third question you will solve, it will take more less time. The more questions you will solve, no, the time will keep on reducing and automatically the confidence will start building. But still, you will commit mistakes in the question. That is doable. That you have to do. Mistakes are going to be happening only. Yes or no? But by doing those mistakes only you are learning new things, no? That next time if something like this comes, I will not do this mistake. Full question you will not do mistake in everything. But 2 or 3 different things are asked, which you are not that much comfortable. Yes or no? So only those things are to be taken care of. Done? So pay attention. Salary you have calculated. House property, GAV will be nil. GAV will be nil. Municipal tax, no information. Even if given, will not be allowed. For SOP, no municipal tax deduction. NAV will be nil. 30% will be nil. Interest on housing loan given in the question, 23,000. If you were not following 115 BSE, no, then we would have taken the deduction. Then SOP loss would have come. That would have been our loss from house property head. Getting my point? But since we are following 115 BSE, this interest will also not be allowed and my house property head income will also come as what? Nil only. Now take your calculator. Now we are going to PGBP head. On your calculator, what you will take? 50,000 as net profit. Fast. So you will take 50,000. In that 50,000, start adding. 50,000, it is 5 lakhs. Sorry, 5 lakhs, huh? 5 lakhs. You will add 10,000 first. First expense disallowed is administrative charges. 10,000 add. Then add SGST penalty 5,000. Then you are going to add 40,000 interest. Then you are going to add 2 lakh rupees of depreciation. On your calculator, an amount will be there 7,55,000. Now, right hand side, reduce depreciation of 15,000. Reduce 1,80,000 as agricultural income. On your calculator, you must be getting 5,60,000. You all are getting that 5,60,000? Now, wait. There is some unrecorded business expense. Yes, sir. Unrecorded business expense of 48,000. Reduce 48,000. One more unrecorded business expense. Depreciation. How much? 2,23,500. See, if we would be following if we would be shifting out of 115 BSE, not following 115 BSE, then we would have taken the deduction for additional depreciation also, which we have calculated. But we are not going to take that depreciation. We are only going to take normal depreciation. Okay, no? So reduce to 23,500. On your calculator, you are having 288,500. Yes or no? That is, my dear friend, your PGBP income. Go and check. Go and check in the textbook. 288,500 is there or not? Answers. This is question number 9, no? See. Can you say 288,500? This is your PGBP profit. Now, I have got my PGBP income and you know how to present it now. Sure? In question number 1 only I have explained in detail that how you will present. Okay, no? So what you are going to do here? Now you are going to write down salary head nil, house property head nil, and PGBP head will be 2,88,500. Do you have capital gain? No. Do you have IFOS? Yes. In IFOS you have one taxable income only. 15,000 dividend. So IFOS head total will be 15,000. Can you add 15,000 over here? 288,500 plus 15,000 will be 3,03,500. Guys, this is your GTI, gross total income. Now from gross total income you get chapter 6A deduction. Do you have any chapter 6A deduction? Yes, ATC you are having. But you cannot claim it because you are following 115 BSE. So chapter 6A deduction you are not going to take, nil. So your total income, my dear friends, will be 3,03,500. This is your total income. And on this income now you are supposed to pay tax. Tax calculation will happen on this. But remember, the tax rates which you will apply here, no, will not be your normal tax rates because you are following 115 BSE. So concessional tax rates of 115 BSE will be applied on this. Sir, what are the concessional tax rates of 115 BSE? I am yet to discuss that. But I'll give you one idea. Up to 3 lakh, no tax. 3 lakh to 7 lakh, 5%. 7 lakh to 10 lakh, 10%. 10 lakh to 12 lakh, it is 15%. 12 lakh to 15 lakhs, it is 20%. And above 15 lakhs, it is 30%. So those tax rates you are going to apply on this income. And to calculate tax by applying those tax rates, your total income should be calculated in this way without taking certain deductions and exemptions. Getting my point? Now the same question they will give you in the exam, but they will twist. Last sentence they will write, assessee is not following 115 BSE, he is shifting out. So what changes will be made? Come on, see. In that case, salary will become nil. That remains same. House property remains same. But don't you think under the head PGBP, now you are going to get deduction for additional depreciation also? So do you already have PGBP income? 288,500. Out of that, reduce 60,000. Additional depreciation which you have not claimed. So you will get 228,500. Did you get 228,500? So 228,500 in that case will be your PGBP income. Capital gain will still remain nil. Hello sir. Then 15,000 other sources will still remain same. Now you total this. You will get 2,43,500. This will be your GTI. Yes or no? 243,500. Are you all getting this amount? Now out of this 243 GTI, you are going to get chapter 6A deduction also. And chapter 6A ATC was there. Housing loan repayment, how much was that? 50,000. And ATC there is a limit. You cannot take deduction under ATC over and above more than 1,50,000. So if your ATC payments are there, total amount cannot be more than 1,50,000. If the total amount of ATC is more than 1,50,000, you cannot take. You can take up to 150 only. So the amount is not more than 150. So entire amount you can take under ATC. Yes or no? So now do the total. Are you getting 1,93,500? That 1,93,500 will be your total income if you follow 115. Sorry, if you don't follow 115 BAC. And if you follow 115 BSE, then your total income should be 3,03,500. Everyone understood this question and the solution? See, these type of questions will come in the exam. Trust me on this. The same question can come in the exam for 15 marks. Additionally, they will tell you to calculate the tax liability also. And tax liability calculation, you all know. You know na how to calculate the tax. If 193,500 you would have calculated, you would have applied the normal rates. Okay, sorry. Huh? My mistake here. One big mistake I have committed. What? SOP interest I did not take. So in SOP, no, interest will be allowed as a deduction. My mistake, see. So SOP, here it will be negative 23,000. So SOP interest will be allowed. So house property loss will be there. How much? 23,000. See, I only said and I forgot to take it. Getting my point, everyone? So now the entire calculation will change. The amount will change. Here it will be 2,20,500 if I'm not wrong, no? 2,20,500, 220,500. And out of that, if you reduce 50,000, then you'll get 1,70,500. Done, no? 170. Now it is okay? Perfect. 115 BS. See, getting rectified by the students is something which I like. Okay. Even as a teacher, I can also commit these kind of mistakes. So it can happen from you also. Okay. But it is always a learning thing. See, next time when I'll be here, no, I'll remember that in my last batch, when I was taking, I committed a small error here. I forgot to take that interest. I forgot to take 23,000 negative over here. This can happen with you. But the more questions you will solve, the more perfections you will get. Getting my point? Sure. Okay. Question number 15. Till 14 we have completed everything, right? Do you remember compulsory maintenance of books of accounts 44AA? You remember, no? This question is based on that. Vinod is a person carrying on profession as film artist. Film artist, do you remember film artist? Notified profession. Doctor, lawyer, then engineer, interior designer, and after that few professions which are notified by CVDT. In those 11 professions, film artists were also there. So is it a notified profession? Film artist is a notified profession under 44AA subsection 1. It was covered in point number 1 only. So if you are doing any notified profession and the gross receipt of last 3 years, all the 3 years, if that is more than 1,50,000. So for this year, you will have to compulsorily maintain the books and documents separately. Hello? For this profession. Compulsory maintain. Which books? The books which are prescribed in Rule 6F. Do you remember those 5 books? Cash book, ledger, journal, invoices which you are issuing to the clients, the carbon copies of them in serially numbered format, then original bills of all the expenses. These Rule 6F prescribed books and documents will have to compulsorily maintain. But for that, the gross receipt of the last 3 years, all the last 3 years should be more than 1,50,000. Do you remember that? Now see, he is a film artist. His gross receipts from the profession are, last year it was 2,10,000. Last year it was 180. Both the years more than 150. But can you say last year it was only 1,15,000? Not more than 1,50,000. So for all the 3 years, the gross receipts more than 1,50,000? No. And if it is not expected also in this year that it will go beyond 1,50,000. If last 3 years, not more than 1,50,000, but it should be expected that in this year it will be more than 150, then compulsorily maintain prescribed books. Yes or no? But if In this year also, it is not expected that it will be more than 1,50,000. Then will you maintain books? Yes. Then you will be covered in point number 2, not point number 1. You will be covered in point number 2. So any notified professionals, if not covered in point number 1, meaning that last 3 years gross receipts does not exceed 1,50,000, or this year's gross receipt is not expected to be more than 1,50,000, then definitely you will be covered in point number 2. You will also have to compulsorily maintain, but not the prescribed books, but the books as would enable your assessing officer to compute your total income. Those books you are supposed to compulsorily maintain. That is the provision which we have studied, no? So they are saying, what is his obligation regarding maintenance of books of accounts for the assessment year 25-26 under 44AA? Tell me. What is his obligation? Is he required to maintain the books? Yes. Looking at this, it does not seem that he is required to maintain the prescribed books. But wait, if in this year it is expected that it will be more than 1,50,000, then prescribed books. But if in this year it is not expected that it will cross 1,50,000, then also you will maintain compulsorily. Compulsory requirement, obligation to maintain books compulsory. But now you will not maintain prescribed books, but you will maintain such books which would require which would enable the assessing officer to compute your total income properly. That is the answer. Please read the answer once. And one question we solved yesterday. Mr. Shivam. For Mr. Shivam, we had to calculate the profit as per regular provisions, which we calculated yesterday. But today, for that same question, we are going to calculate Shivam's PGBP income as per 44AD presumptive basis. Come to that question. That was your question number 7, if I am not wrong. Question number 7. Please pay attention on this question now. So how much PGBP income we calculated for Shivam by following normal provisions? See, this is written in front of you. 130,900. Did we calculate this as per presumptive provisions or we followed regular provisions? Taxable PGBP income, deductions, disallowance, everything we did? No. So if we are doing this, can we do this? Yes. But for Shivam, can we follow 44AD? First thing, check. Shivam is an individual. So who can follow 44AD? Individual can follow? Yes. HUF can follow? Yes. Firm can also follow, but other than LLP. So individuals can follow? Yes, provided that individual is a resident. So if nothing is mentioned, Shivam is a resident only. So resident individual can claim 44AD? Yes, provided his business is not any of those 4 business. His business is a retail trade business. So for retail trade, can he follow 44AD? Yes, because it is not 44AA professions, 11 professions. It is not a transport business. It is not a commission or brokerage earning business. It is not an agency business. Any other business, retail business is covered in any other business. Yes or no? And for this business, what is his turnover? Can you see this is his turnover? Sales is nothing but the turnover, no? Now, individual, he is a resident, he is into a business, eligible business, yes or no? And from this eligible business, his turnover is less than equal to 2 crores. Can you say all the conditions to claim presumptive profits are fulfilled? So can he follow 44AD? The answer is yes, he can follow 44AD. Now if he follows 44AD, how much presumptive income he will have to show? Minimum 8% of his turnover. Yes or no? But wait, do you remember we marked something over here and I told you that this is relevant while determining profit under 44AD? Yes or no? Come to this. Now read this. Assume that the whole of the amount of turnover received by account paycheck or use of ECS through bank account during the previous year itself. Meaning that the entire turnover of 1 crore 12 lakhs 1 crore 12 lakh 11,500. This entire turnover you have received in this year only by way of prescribed modes. So for this turnover, now don't show 8%. Now you'll have to show 6%. So how much will be the 6% of that amount? Come on, tell me. Calculate. 670 to 690. 670 to 690. So if he follows 44 AD in this year, then as per 44 AD, his presumptive PGBP income will be this much. But if he does not follow presumptive provision in this year, hello sir, then he will have to calculate his PGBP income by following regular provisions, which will be 1,30,900. But in that case, no sir, he will have to maintain the books also, he will have to get them audited also, because he is not getting himself covered in 44 AD. So if he is not following 44 AD, for him 2 crore limit will not be applicable for tax audit. Now he will have to get the tax audit done. He will have to maintain the books. He will have to get the tax audit done because his turnover is more than 1 CR. So now tell me, as a chartered accountant for Shivam, what advice you will give him? They are not telling you to give the advice, but I am asking you, what advice you will give Shivam? That Shivam, please listen to me carefully. I am your chartered accountant. If you follow 44 AD, you can follow 44 AD for your business. And if you follow 44 AD, since your entire turnover is received in this year by prescribed modes, we don't have to show 8%, we will be showing 6%. And that 6% will be treated as your PGBP income. No other deduction will be allowed. This amount you will have to show as PGBP income. But Shimam, what is the benefit here, you know? We don't have to do the regular calculation. Okay, we have to show this much only as PGBP income, which is minimum 6%, or we can show more also. No need to claim 32, 37 one separately. Show this much. And wait, we are not required to maintain the books also. We are not required to get them audited also, Shivam. But Shivam, being your chartered accountant, no, I calculated your PGBP income by following regular provisions also. And your PGBP income as per regular provisions was only 1,30,900, Shivam. So according to me, your chartered accountant, I think that it is better to pay tax on 1,39,900 rather than paying tax on 6,72,690. 690. And Shivam, we'll pay tax on this. We'll save a lot of tax. But the disadvantage will be what, you know? The disadvantage will be, since your turnover is also more than 1 CR, no? For a business, if the turnover is more than 1 CR, separate books will be maintained for this business and we'll have to get them audited. Still, maintenance of books cost will be incurred. Getting the books audited, I will charge some fees. So considering those expenses and the tax on this, still the total amount spent will be lower than the tax on this amount. Getting my point? Calculate 30% tax on this. Calculate 30% on this. Just take an example, 30% tax. It will be 2,01,807. Yes or no? If we calculate 30%. But don't you think for individual, flat 30% is not applicable, slab rates are applicable? So here the slab rates will be applied. By applying the slab rates, there will be tax. And that tax, the tax will be very less amount, but still we will have to pay tax here. No maintaining book, no need to get them audited. Yes or no? We'll have to pay tax. But here, no, we'll not have to pay tax only. Because for us, for individuals, basic exemption limit is 2,50,000. Within 2,50,000, this will be covered. No need to pay the tax. Whatever amount spent will be what? My audit fees and maintenance of books. Now we will check that under which option your outflow is more. That option we will skip. And the option where our outflow is lowest, we will claim it. Getting my point? Everyone? But this advice is not asked. If advice is asked, no, always show this. 13900 is lower than what? The presumptive profits. It is better to pay tax on this. Hello? Maintain the books, get them audited, pay tax on this because it is lower than presumptive profits. Getting my point? The additional expense incurred will be what? Audit fees and the books maintenance fees. Still the tax will be lower on this, and the amount of audit fees and books maintenance fees all taken together will be still lower than this, lower than the tax on this income, lower than the tax on this income. Then this is all time better only. Got it, sir? In the question, no, they are telling you to compute. They are telling you to compute what? Compute PGBP under presumptive taxation, which we have just now calculated 6,72,000 something, and also compute the profit as per regular provision, which we calculated last lecture. Assuming he has exercised the option to opting out. See, even if you opt out from 115 BSE or you don't opt out, the 44AD provisions remains same. There is no change in that. Got it, sir? Should I move ahead? This is the one question which we were supposed to complete, which we did not complete yesterday. We completed it today. Sure. Now coming to one more question. This come to illustrations, because all the questions here, I guess they are covered. Okay, yes. Come to illustrations. Illustration number till 15th everything is done, no? Come to 16th. Mark this question important. Very good question. Okay. Mr. Praveen engaged in retail trade. Mr. Praveen is an individual. Yes, sir. He is engaged in retail trade. Eligible business. Yes, sir. Turnover is 2 crore 98 lakh 50,000, sir. Turnover is more than 2 crores. Usually 44AD not applicable. But there was one exception. Do you remember? Even if the turnover is more than 2 crores, 5% of that turnover or less amount should be received in cash. Then also you can follow 44AD and show 8% of that turnover as presumptive profits. So out of this, 5% meaning 2 crore 98 lakh 50,000, 2 crore 98 lakh 50,000 into 5% if you will do, you will get 14 lakh 92,500. So this year, out of the turnover of 2 crore 98 lakh 500, 2 crore 98 lakh 50,000, out of this only 14 lakh 92,500 should be received in cash or less than that. Then you are eligible for 44AD. Yes or no? Now what they are saying, see, amount received in cash during this year is only 14 lakhs. Meaning that less than 14 lakh 92,500 you are receiving. Meaning your cash receipts out of the turnover is less than 5%. So you are eligible for 44AD even if your turnover exceeds 2 crore. But it does not exceed 3 crore. Yes or no? So now whatever turnover is there, 8% of that we are supposed to show. But wait, we will not show 8%. Why? Because the turnover, out of that only 14 lakh is received in cash, meaning that the entire turnover other than 14 lakhs would have been received by way of prescribed modes only, no? So what is happening? The balance through prescribed electronic modes, even if you do, see, if I would have been your examiner, no, I would not have given this sentence. Only 14 lakh is received in cash, common sense, meaning that the balance would have been received by prescribed modes. So there is no need to say. And it is said by the examiner, then you should thank him that he is giving you a hint that on the entire turnover, don't take 8%. 8% will be taken only on the turnover, 14 lakhs. And on the balance turnover, you are supposed to take 6% only because that would have been received by prescribed modes. And since 3 crore limit we are taking, meaning that the entire turnover, 95% or more is received by what? Prescribed modes. So for that balance, we have to apply what? 6%. So I will take 6% of 2 crore 84 lakh 50,000. Why? Because out of 2 crore 98 lakh 50,000, I will reduce 14 lakhs. On that, I will apply 8%. That is 1 lakh 12,000. And on the balance, 2 crore 84 lakh 50,000, I will apply 6%. And that 6% will be 17 lakh 7,000. So 17 lakh 7,000 plus 1 lakh 12,000 will give me 18 lakh 19,000. That should be my presumptive income under section 44AD. I can follow 44AD, and in that case my minimum income which I will be showing under 44AD should be this much or a more amount. Okay. Now what they are saying, his income from the side business as per books of account is 15 lakhs. Meaning regular provisions. So by following regular provision, he is earning 15. By following regular provisions, he is showing 15. And if he follows 44 AD, he will have to show 18 lakh 19. Okay. Now, retail trade is the only source of income for Mr. Praveen. Assessment year 24-25 was the first year for which he declared his business income in accordance with the provisions of presumptive. Wait. Assessment year 24-25 means previous year 23-24. So in the last year he showed what? Presumptive provision for the first time. Can he show presumptive provision in this year? Yes. Last year if he followed for the first time, next 5 years he can follow. So next 5 years, this is the first year out of those 5 years. And in the first year, out of the next 5 years, in the first year, the limit does not exceed. So he will have to show minimum 18 lakh 19,000 in this year. But what if he does not show 18 lakh 19,000 and he is showing less than that? Can he show? Yes, he can show. But this year, his total income is more than basic exemption limit because this is the only source of income, and out of that you are showing 15 lakhs. It is more than basic exemption limit. Your total income will be this much only now, and it is more than basic exemption limit. So now in this year, if you are showing 15 lakhs and not 18 lakh 19,500, lower than this. So this year, now you'll have to maintain the books also and get them audited also. Because this year's total income will be this year's PGBP income only, which is 15 lakhs, which is more than your basic exemption limit. Getting my point, sir? So they are telling you, is Mr. Praveen also eligible for presumptive determination of income chargeable to tax for this year? Assessment year 25-26 means previous year 24-20. Yes, he is eligible and we have already done that. Okay, no? Even if his turnover is more than 2 crore and it does not exceed 3 crore, still he can claim 44 AD because this year's cash receipts were only 14 lakh, which is less than 5% of his turnover. 5% of his turnover was 14 lakh 92,500, less than that. Hence, he can claim 44 AD in this year also. Sure? If so, if he can follow 44 AD, determine his income from retail trade as per the applicable presumptive process, which we have already determined, 18 lakh 19. So, if he is eligible, then how much amount as per 44 AD should be his PGBP income for this year? 18 lakh 19,500. 18 lakh 19,000, which we have already calculated. Next, in case Mr. Praveen wants to declare profits as per books of accounts from retail trade, what are his obligations under Income Tax Act? Meaning that even if he is eligible in this year, he has to show 18 lakh 19,000 as his PGBP income, minimum this much. He has to show. Can he show lower profits of 15 lakhs? Yes. Absolutely yes. Then in that case, what will be his obligations? Since this 15 lakh was the only source of income, meaning his total income for this year will be 15 lakhs only, which is more than his basic exemption limit. So now in this year, he will have to compulsorily maintain the books of accounts and get them audited. These are the obligations. Next one, what is the due date for filing his return of income? Under both the options, if he is following 44 AD and showing 18 lakh 19,000 as his PGBP income, he is not required to get the books audited. He is not required to maintain the books. He is not required to get the books audited, meaning that he is not an assessee who is covered by tax audit provisions. So for him, the due date of filing ROI will be 31st July of the assessment year. But if he is not showing this 18 lakh 19,000, he is showing less, then he will have to compulsorily maintain the books, get them audited, meaning he is covered by tax audit provisions. And now the due date of filing his ROI will not be 31st July, it will be 31st October. Superb question. This gives you the entire idea of 44 AD. Got it, sir? Should we move? And you have to mark this question important, huh? You have marked it, no? Okay, very good. Question number 17. Very easy question. See, Mr. X commenced the business of operating goods vehicle on 1st April 2024, meaning that this business is started in this year only. And he purchased the following vehicles during the previous year 24-25. Compute his income under section 44A for 25-26. Now they are telling you to compute his income under 44A, meaning presumptive income. For some vehicles, 7,500 per month minimum, or even for the part of the month. And if heavy goods vehicle are there, whose gross vehicle weight is more than 12 tons, for those vehicles, he cannot show 7,500. He will have to show minimum 1,000 rupees per ton of the gross vehicle weight of that heavy goods vehicle. Yes or no? So if you see, first 4 vehicles, no, 7,000 kilograms, 6,500 kilogram, 10,000 kilogram, 11,000 kilogram. The gross vehicle weight of first 4 vehicles is how much? Less than 12 ton, no. Last 2 vehicles, last 2 cases, it is more than 12 tons, meaning last 2 are heavy goods vehicle. What is the gross vehicle weight? 15,000 kilogram, 15,000 kilogram. 1,000 kilogram is equal to 1 ton. Meaning last 2 vehicles are 15 ton vehicles. For every ton, how much you are going to show? 1,000 rupees. So for 15 ton, how much you are going to show? 15,000 rupees minimum. And the earlier 4 vehicles, you are going to show 7,500, 7,500. And this you are supposed to show for all those vehicles. These 2 vehicles, this 1 vehicle, this 3 vehicle, this 1, this 2, this 1. Yes or no? For all these vehicles, you are supposed to show this much. But for the months of ownership, so tell me, this vehicle was bought, 2 vehicles were bought on 10th of April 2024. Wait. If you buy any vehicle on 10th of April 24, you become the owner in the month of April. So 10th April to 31st March, you are the owner. 11 months and 21 days. Don't count 11 months and 21, count full 12 months. Because in the month of April, you became the owner, no? Count the full April month also. So for the first vehicle, 7,500 into 2 vehicles into 12 months will be the minimum amount which you are going to show for these vehicles. Hello, sir. So that will be 1,80,000. Second vehicles, 1 vehicle, no? 15th March 2025 you bought. 15th March 2025, meaning only 1 month ownership. Only 16 days ownership, to be precise. But that 16 days will not be counted. That part of the month will be counted as full month, 1 month. So for that vehicle, 7,500 for that 1 vehicle and only for 1 month. So for that vehicle, 7,500 you will show. Yes or no? Next one. Next 3 vehicles you bought in the month of July. Whenever you have bought in July, did you become the owner in the month of July? Yes. Start counting from July to March, 9 months. 9 months, 7,500 into 3. Yes or no? Then 1 vehicle you bought in the month of January. So you became the owner in the month of January, Jan, Feb, March. 3 months, 7,500 for that 1 vehicle. That will give you how much? 22,500. Hello, sir. Next one. Please check. Next vehicle you are buying in the month of August. Even though you are the owner of the asset, owner of that vehicle for only 3 days in the August, 29, 30 and 31, still the full August month will be counted. So August to March will be how many months? 8 months. 8 months on this vehicle. on these two vehicles, you will not apply 7,500, you will apply 15,000 because this is heavy goods vehicle. And last vehicle, February you are buying, February and March, 2 months ownership multiplied by one vehicle, 15,000. You will get the amounts. Now add all these amounts, you will get 6,82,500 or a higher sum you can show as your presumptive income under 44A. Done. Will you remember this? Easy, no? Now read the last two lines. What would your answer change if the goods vehicle purchased in April 24, meaning they are talking about these vehicles. See, these two vehicles. Goods vehicle purchased in the month of April were put to use from July. It will not change my answer because the presumptive income under section 44A is calculated based on the number of months ownership and not the number of months use. So we have calculated on the basis of number of months, even though it was used from July. It will not change. It will remain same. Done, sir? Sure. Now see, in this question, if I would have made this question, no, what I would have done, you know? Can you see how many vehicles are there? How many vehicles are there in the month of February? One vehicle is there. Okay. What I would have done, you know? I would have given two vehicles over here. So what difference would that make? Wait. If you are seeing the dates, no, they have given dates not in order. The dates are not in order. When the first vehicle will be bought? April. April, how many vehicles you bought? Two. So you are the owner of two vehicles during the year. More than 10? No. Then after that, you are not going to buy in the month of March. After April, you are going to buy in the month of July. How many you are buying? 3. So 2 you already had. July 3 bought. So total ownership 5. Still it is not more than 10. Yes or no? After July, you are going to buy in the month of August. How many you bought in the August? 2. So 2 plus 3, you were already the owner of 5 vehicles. Now buying these 2, you are now the owner of 7 vehicles in this year. Now after August, you are going to buy in the month of January. January, how many you bought? 1. Hello? So now the vehicle numbers become 8. As on January, the vehicle number of vehicles become 8. Now in the month of February, you will go and buy 1. It will become 9. You are going and buying 1. No, it will become 9. And now in the month of March, you are going and buying 1. It becomes 10. So throughout the year, your ownership is not more than 10. Hence, you are taking this 44A. I would have done a small thing. Here I would have given 2 vehicles. So till January, you were having 8, no? Now in the February, you will buy 2. You will already be the owner of 10 vehicles as on March. As on February. When you will buy 2 vehicles in the February, before February till January, you had the ownership of 8 vehicles. So in the month of February, when you will buy 2, you will become the owner of 10 vehicles as on February. Now the moment you will buy that 1 vehicle in the March month, no, your ownership will cross 10. So at any time during the previous year, even for a single day, the ownership exceeds 10. 44A, not allowed. If I would have been your examiner, I would have done that. And you would have calculated 44A. Full answer wrong. Answer here would be presumptive income under section 44A cannot be computed because during the previous year, the number of vehicles owned by the assessee exceeds 10 as on March. Hence, presumptive income cannot be calculated. He will have to calculate normal income only, regular provisions. Will you remember this? Sure. So this is the end of 44A over here. One more question is there in your Practice questions. Question number 8. Mr. Sukhvinder. Mr. Sukhvinder is engaged in the business of plying goods carriages. Okay. On 1st April 24, he owns 10 trucks. Wait. On 1st April, he already owns 10 trucks. Okay. Out of which 6 are heavy goods vehicles, and meaning that the balance 4 are light goods vehicle. If 10 are owned, then out of that 10, 6 are heavy. So remaining 4 are light goods vehicle. So for 4 vehicles, you are going to show how much? 7,500, and for these 6 vehicles, you are going to show how much? 15,000. 15,000 kg each. Yes or no? Gross vehicle weight. 15,000 kg means 15 ton. So per ton how much? Per ton 1000. So 15 ton 15,000. Okay. On 2nd May, he sold one of the heavy goods vehicle. On 2nd May, he sold one of the heavy goods vehicle and purchased a light goods vehicle on 6th May. Wait, in the month of May itself, no, in the month of May itself, he removed one and he brought one. Hence, his total number is still same. What if he had removed one and bought two? So the total would have reached 11. Not eligible for 44A. But see, he is very smart. He is removing one vehicle and in that same month, he is buying one vehicle. And see, removing first on 2nd May. And then on 6th May, he is buying. If this would also change, no? Buying first and then removing, then also it will become 11. 1st April, how many vehicles? 1st April, how many vehicles? 10. On 2nd May, he is selling one. So it becomes 9. And on 6th May, he is buying one. Then again it becomes 10. Does not exceed 11. Yes or no? But what I would have done? 10 vehicles. First he is buying on 2nd May one vehicle. The moment he buys, 10 plus 1 becomes 11. He is the owner of more than 10 vehicles. Now even if in that same month on 6th May he will sell one, now that will become 10. But as on 2nd May his total number of vehicles was more than 10, no? He will not be eligible for 44A. Even for a single day, his ownership is more than 10. He will lose 44A. See, this examiner is so good person. 10 out of that, 1 is sold. How much? 9. And again 1 is bought. 10. So it does not exceed 11. Hence you can calculate 44A. Yes or no? Now what they are saying, this new vehicle could however be put to use on 15th June. Bullshit. I don't know when it is put to use. I will be concerned only about month's ownership. Okay, no? So when the new vehicle was bought? In the month of May. So ownership started from the month of May. For that new vehicle, the income will be calculated from May itself and not from June. Okay, next one. Compute the total income of Sukhvinder for the assessment year 25-26, taking note of the following data. See, this is PGBP income of Sukhvinder as per regular provisions. His freight income, PGBP income, these are the expenses incurred in his profession, business. Yes or no? After claiming the deduction, his normal provision PGBP income is this much. And he is also getting other incomes of 70,000. See, if he would have followed normal provisions, what did I say? If he would have followed normal provisions, normal. So as per normal provisions, his PGBP income was how much? Come on, tell me. As per normal provisions, his PGBP income would have been 4,45,000 and his other incomes would have been added. Other incomes would have been how much? 70,000 only, no? So his total income would have been 5,15,000. But if he follows presumptive provisions of 44A, so here I will have to first calculate his presumptive PGBP income as per 44A, and then in that I will add 70,000. Then my total income will be a separate amount, different amount. I will have to see which is the most beneficial option. Okay, no? But for that, this income should be calculated. If I would have twisted the question, no? One bought and then sold, then 44A cannot be applied. He has to show normal only. Hello? But since it is not twisted, he can follow 44A. So now 44A income will be calculated. Now tell me, heavy goods vehicle he is having. Heavy goods vehicle. Okay. How many heavy goods vehicle he is having in the beginning? 6. And out of that, 1 is sold in the month of May, 2nd May. So April also and May also, on 6 vehicles you will calculate 15,000. So April and May, for these 2 months, you had the ownership of 6 heavy goods vehicles multiplied by 15,000 into how many months? 2 months only. So tell me, what is the total? Tell me what is the total over here. Do it fast. 15,000 into 6 into 2 will give you 1,80,000. Now from the June to March, only 5 vehicles, heavy goods vehicle will be there. Because he is already selling 1 in the month of May. And for that 1 vehicle and the first vehicle, for these 2 vehicles, he will calculate for first 6 vehicles. 6 out of that 1 he is selling in the month of May. So after May, from June, he is not having 6 heavy goods vehicle. He is only having 5. So from June to March, 5 vehicles, 15,000 per month into how many months? Now it will be June to March, 10 months. So calculate this. 15,000 into 5 into 10. You will get 7,50,000. Now can you add all this? 750 plus 1,80,000, you will get 9,30,000. So 9,30,000 will be your total minimum income from heavy goods vehicle. This much you have to show from heavy goods vehicle. This much or more. But light goods vehicle you also had, no? April. How many light goods vehicle you had? April month. 4. So only for the month of April you are having 4. From May it becomes 5, no? So for the month of April, you will calculate for 4 vehicles. April you will calculate for 4. 7,500 into how many months? 1 month. And from May to March, how many vehicles you are having now? 5. Because from 6th May, you have started owning 1 more vehicle, light good vehicle. Okay, no? 5 into 7,500 into 11. So this will be 7,500 into 4. You will get 30,000 over here. And 7,500 into 5 into 11. You will get 4,12,500. Getting it, everyone? So this will be 4,42,500. Everyone getting this? So 4,12,000 plus 30,000, 4,42,500 plus 9,30,000. 13,72,500 or more he has to show. This will be his presumptive income under section 44 AE. Everyone got this? Now if he is following presumptive provision, how much income he will have to show? 13,72,500 plus his other incomes 70,000 will give him 14,42,500. Tell me, which is the better option for him? Normal one. We will maintain books of accounts. We will get them audited also. We will follow normal only. We are supposed to pay tax only on 5,15,000. Easy, no? This was your last one. Compute the total income they have told. So in both the options you are supposed to give. Let's see, if you are following normal, total income will be this much. If you are following 44A, total income will be this. That's it. No need to say anything else. Because they are not asking for your suggestion. So if nobody asks for your suggestion, don't give. If suggestion is asked, only then give. Then no, compute total income. But they are not telling you to compute by following 44A or normal. If I follow normal, this will be my total income. If I will follow 44A, this will be my total income. Got it, sir? Done. This is the end of your chapter PGBP. Done.